Hi, welcome to this discussion on internal controls, specifically cash receipts at the register. Believe it or not, the key control over cash receipts at the register is that cash register receipt, that little small white piece of paper. However, it's not actually the small white piece of paper that is the control. It is that cash register receipt indicates that transaction has been entered into our accounting system, specifically the cash register. Now let's move on and discuss some of our other internal control principles that have been previously discussed. For example, separation of duties. Let's see how separation of duties applies to cash register receipts. First of all, the cashier, who is actually entering the transaction into the system, must be separated from the person who is actually going to deposit the daily cash receipts at the bank. These two separate individuals are a check on each other. Again, the cashier should give her cash register receipts for the day to the bank depositor, and they both should sign off on some sort of a report or receipt for what the amount is. The next separation of duties that needs to be in place is that the person who actually deposits the amount in the bank needs to be a separate individual than the person that is performing the bank reconciliation. Therefore, the amounts that were actually deposited by the bank depositor, which was agreed upon by the amount of the cashier or cashiers, needs to be reconciled and make sure that that amount was actually deposited in the bank, and this would be caught or controlled by the bank reconciliation clerk. There is much greater discussion in more details in later classes, but for now we were trying to show how some of our key internal control principles are applying to cash register receipts. Finally, another discussion we have previously had is on regular and independent reviews. In this example, we have a couple of cases where we are performing regular or independent reviews. For example, most computerized cash registers have some sort of a report generating function at the end of the day. Hopefully, all cashiers are having to run their cash register report at the end of the day and reconcile the amount of cash, checks, Visa credit card receipts, etc. with the amounts that are reported on their cash register reports. This is a type of a report that a head cashier would probably reconcile again with each one of their cashiers that they have. Or, if we don't have that many, the bank depositor would then again reconcile the cashier's report from each cashier till. Finally, the second regular and independent review related to this internal control over cash receipts at the register would be the actual bank reconciliation. The bank reconciliation is making sure that the amount that was agreed upon that the bank depositor said they deposited each day was actually deposited.